I really have a great guest today because, I've been talking to Jerry Robinson for a while everything's been really one way. So, Jerry, welcome back to Face.
It's
I'm
great to be
asking
here,
you to
Dale.
unmute. Yeah, good
Yeah,
to have you, buddy.
yeah,
So,
great to be here.
yeah, gosh, I mean, since we last talked, we had the red wave, we had the excitement, in crypto and the market, going into January. Has the recent, really only been 2 weeks that the market has been under pressure, but it's given up a lot in a few weeks, although it was distributing for a long time. Knowing you, you're stalking things to buy on weakness. Am I am I on target?
Yes, well, and only because my time horizon is, 20,
Long.
2040. I'm looking at, so I got 10, 15 years. I'm looking for those things that can really bring the best bang for the buck. And so, yeah, I mean, the near term stuff is weird. Yes, there's some problems here and there, but and we can talk about that, especially for the tactical traders who are out there. I mean, there's certainly things we
Okay.
see, but in terms of
Okay.
are we worried about what this means for the next 5 years, 10 years? We're not worried at all. In fact, we like to see weakness because that helps our cost basis over a longer period of time. You see,
Yeah.
I'm of the opinion, Dale, that the big corporations that are out there, let's say the Exxons or the
Yeah.
Amazons or the Apples, I've long said that these companies outlast the United States government. So that's why I don't buy bonds. I'm not interested in buying bonds. I'm not interested and you can see from the incoming administration, they apparently are trying to do something about the seismic debt issues that we have. We'll see. But overall, I'm of the opinion that these large multinational corporations, it's like the genie's out of the bottle. You're not going to shut them
Yeah.
down. And
Yeah.
and you
They're really running things, aren't they?
they're running things and they're going to be here when governments are not. In fact, some of them are already quasi governments, larger than some governments.
Real
So
interesting take. I've heard that before.
yeah,
Multinationals are running the show. The
right.
governments are, they pick the governments.
Exactly. So you look for the savviest of them. And for me, I think Buffett had the same idea for a long time. He scaled back just a bit, but for me, the smartest guys in the room for a long time were Apple. And if you wanted proof, just look how they navigated COVID. Oh my goodness. I mean, with the smartest guys in the room bar none. But there were other guys as well, other, companies out there as well that navigated COVID very, very well. Others, blew up. They imploded because they didn't know what they were doing. They didn't have connections. They weren't large enough. They didn't have access to capital, blah, blah, blah. So my point is that we could have another COVID. We could have another crisis. We could have another world war. We could have all these things. But here's the thing. Some of these companies are going to navigate it better than you expect. And my hunt is to find those kinds of companies and to sit, and to buy them when everybody's scared. And
Okay.
so
So
maybe
you probably love Tesla down here.
um,
No, let's show some charts, Jerry.
yeah,
And
let me
and,
get,
and yeah, and I wanted to ask you about, when you're talking about these corporations and
no.
long term that they're going to last. Do you hedge the currency in the corporations? Have you noticed? I know you've noticed dollar pretty weak. Looks like
Yes.
it topped out up there at 109 after the tariffs.
Hey,
We're
let's
Go
start
ahead.
there. Let me
All
let me
right.
get the let me get the dollar chart up.
Uh,
So this one, let's see. There's two here I'll look at. So yes, so we are getting some relief on that dollar. It's back at the 200-day moving average, which
Yeah.
we haven't seen since last fall.
Yeah.
We had this rally that kicked off in the dollar. You guys, cover this all the time, so I'm not going to belabor it. But my point of view, my perspective was as the expectation for a Trump victory rose, which we began to notice in September, October, the
Yeah.
dollar began to rally. But that was the same, and I don't have a chart here in front of me. I wish I did. I would have had it prepped. I didn't think about it, but if you look at Trump's first term, it does the same exact thing. It rallies right into the inauguration. And then as soon as the inauguration is over, it begins to turn right back down. It's like an inverse V, you know. And so that's
Mhm.
exactly what we see playing out now. As people begin to see Trump's policies, it tends to pressure the dollar down. Another thing that we've been seeing that's been very helpful, and this has been the Trump strategy, has been to drive down oil prices. And if you'll notice, they are now they did rally along with everything else, but then they began to come down, and we're seeing some real good price pressure on crude oil. And
Mhm.
that, of course, is a major input into the inflation print that comes out. We're also seeing a lot of pressure on mint like wheat, for example, has had multi-day getting hammered. Corn. I mean, a lot of these things. So all those are inputs. Soybeans, all those are inputs for that CPI print or the PCE, whatever you prefer. And when we look at the USD, we can see it's falling along with bond yields rising because inflation is falling. And so what we've seen a shift from the kind of the Debbie Downer on, okay, well, inflation's here and it's never going to go away, to now suddenly, wait a minute, the economy is slowing. So we've kind of
Yeah, we
seen
have a growth scare happening
now
now.
we got a growth scare. So it's moved from the inflation is never going to go away, it's sticky, to now, well, okay, it's going down, but now the economy is slowing down. And now, then there was said, well, the Fed won't cut more than they need to. They may only cut two. Well, we were saying at the beginning of the year, no, they're going to have to do at least three, probably more. And of course, as the growth scare continues, which we think it will, because if you look at some of the data, like the consumer confidence, the business
Yeah.
confidence, consumer spending is down. If you look at the National Association of Realtors put out something about homes, I think it was for the month of January. We've never seen, since their data, they started keeping track of it, I think, at the beginning of the millennium, but at the beginning of 2000s. But they said, we've never seen this pour of home sales in a single month as they just recently did. So obviously, there's the interest rates are too high to justify many people moving. So you have this kind of the growth scare, and then of course you have President Trump breaking out the AK-47 and shooting it at allies, and raising prices in the process. And so that's going to obviously be inflationary. So,
So what are we going to have? Which one? You
well,
said oil's going down. That's going to tame inflation.
it will.
Tariffs are going in.
Yeah.
It's going to
Well,
exacerbate inflation.
Trump is he is quite something, and I'm always cautious on how I talk about this character. Let me just say this. So prior to Trump getting into office, you nailed it on the head earlier. I was listening off air whenever you were talking briefly, and you had mentioned how politics drives the narrative, the investing narrative, oddly enough and sadly enough. And so when Trump was not in office, there were many Republicans, and I know because I have this followthemoney.com. I coach and educate and mentor, and people's politics was preventing them from participating in the bull market. Okay, so the bull market's going up, but President Biden's the Antichrist, and so you can't invest with the
Right.
Antichrist, and so they stayed out of the market. Okay, so they've been waiting, they've been sitting in Dogecoin or whatever, and now finally that President Trump has entered and Biden is gone. The roles have switched. Okay, so there's a whole bunch of nervous Nellies who are saying, well, Trump is the Antichrist, and so therefore I need to get out of the market. And those who have been waiting are now getting in. So we're seeing a shift that is an addition to just the normal buy in November and sell in May. That normal rotation that comes, plus the annual rotation that comes, plus this strange political rotation that we have where there's this sudden new enthusiasm among Republicans and a sudden dismal dire among Democrats.
Yeah. Yeah.
They just switch roles.
I was talking about a friend of mine who's been bearish his whole life because, for the most part, Democrats have been the more influential party, and
Sure.
never have they had control of the courts and everything. He's now a bull, and is happier on up days. I do have to say though that people that were worried about the market because of this election, so far, have saved a lot of equity if they did get out
Yeah. Well, yes. It all depends.
temporarily. I know with you, yeah,
It all
in
depends where.
2040, I haven't even thought of 2040.
Right. Right.
All
Well, I
right.
mean,
I mean, Jerry, 2040, I'm looking towards, March OPEX, the expiration in March. So
Right. So
anyway,
it's very, very near term. Well, and then of course we have the tariffs, and there's different views upon that. And our view is that, I think I agree with Warren Buffett when he says that, it's clearly it's a tax, and there's
yeah,
no way around it. I mean, it's just economics 101. And so the tariffs to me look like you can already tell because the Commerce Secretary Howard Lutnick came out yesterday and said,
yeah,
hey,
they want to compromise now.
we're going to compromise. So in other words, it's real, real, real tough talk. You're fired. The Trump, and then suddenly, well, maybe we'll do. And so, but guess what? When he does stuff like that, he gets more concessions. That's why he does it. You know that. So apparently, he got more stuff out of the deal. He's squeezing the lemon, getting all the juice out, and then he's like, okay, let's compromise. And so that's just something that you and I and the rest of the investor class or the traders and investors, we're just going to have to understand that that's how it's going to be, just like it was in the first term. Zany, crazy, wild, but also
Yeah,
half the time not even real. So, but I think we've seen a lot of fear here. We've seen more fear in
yeah.
since mid February than I can recall in a long, long, long time. And,
All
and
right,
I know
what are you basing that fear on? The VIX, because
uncertainty.
sentiment has not
Yes.
really turned bearish. 60% bulls still.
Well, I'm referring to there was the AAII bull bear
Oh,
survey that they do, and that one hit the highest. I think the most bearish it had been since 2009. And I thought this is really strange, considering that the stock market is still fairly elevated, and not
yeah.
even the S&P wasn't even below its 200 days. So you normally don't see that kind of
Yeah, the
fear.
bulls have been hanging their hat on that for a week while we've lost 300 handles.
Yes,
That you know what I mean? So
right.
sometimes the sentiment is right, but it is
Hmm.
unusual. I think it's the first time ever at a top like this you've had that kind of bearishness. Usually it's euphoric. So
Yes.
you're viewing that as a contrarian indicator. So what are you accumulating now, bro?
Well, you brought up Tesla, and I do like Tesla with a long-term view. I am concerned about, the whole way that
His
Musk
new job?
he's politicized his role to the point now where he just has has a stink, and I don't know how long it'll take. But people have short memories. If he moves on and goes something else, and 6 months it'll be something else. So Tesla is one area that I think is good. The Nasdaq 100 with a long-term time horizon, I like this. It's back at its 200-day. It's back at an area where it typically bounces. The volume is
Okay.
very large and rising, so I'm suspecting we're going to see a bounce. The,
You
the
buying cues here
uh,
today?
cons,
This break?
I tend to buy on the 200, so I'll be buying. I'll be buying this week.
Okay.
I bought here. I bought back here. I like that 200-day dip, and if it goes below it, it's okay. Because obviously things go up and they go down. They don't go up forever. And when they go down, from a longer term perspective, I get to get more. So maybe I'm slightly different from some of the traders in your audience in that way, where they would normally get out of the way. I'm willing to
Yeah.
to step in and buy, but that served me well over a very long period of time. So
Right. You're
that's just
you're
my
you're
yeah.
tough, man.
Well, I've seen a lot of it. I've seen a lot of the fear, and I've seen that a lot of times it doesn't pan out
Right.
the way that it's often portrayed that it's going to pan out. So, so let me
You,
get back to this. Go ahead.
no, go ahead, you Jerry.
Uh,
So you're scrolling through some of these things. Still bullish gold. It hasn't really done anything wrong.
no,
Uh,
yeah, gold. Let me see. I got gold. Where is my gold? Did I pass it? Let me go back up here. I think I did.
and silver is
Yeah, here it
kind of
is.
having a great day today, cutting through some resistance.
Yeah,
So
silver. Yes, silver. When we look out for 2020, we expected gold and silver to do really well last year. Because we expected the dollar to come down a bit. It really didn't do too
it
much
did,
in those terms. But
but
gold and silver still
yeah,
rallied. But
that was
and
impressive.
it was. We also continue to be bullish on gold and silver this year, especially due to that falling dollar. That's going to really help it continue to rise. And one of the things that we expect for gold this year is for it to hit around 3,200. it's a pretty
Okay.
modest rally, but at the same time, it's still pretty good considering how long in the tooth this rally has gone. When it comes to silver, we have more of a view that we're probably going to hit around the $40 level. That's our target. Of course, that's every opinion's worth whatever it's worth. But
That's a
our
nice
take,
move. Nice move.
yeah, yeah,
20%.
yeah, it really is, and I think it's a justified move because of the supply demand dynamic. So I think there's plenty of upside for silver, but these aren't my favorite
What are
plays.
what
Okay,
are
well I'll be frank with you.
oil?
No, not so much oil. Let me move here to the crypto because it's really the crypto side that I'm extremely bullish on, specifically in 2025. So we've already
That
had some
was a
big
great action yesterday.
yes,
The breakdown, I know you're a technician. You probably saw that descending triangle
yes,
breakdown right under 92, and it
mm-hmm,
measured 75. And so everyone was looking to be a buyer at 75 in the bottom, when everyone's looking
yes,
for one number, uh,
yes,
doesn't get there or melts
right,
through it. So,
yes,
and then yesterday's action I thought was impressive, the way
yes.
it put in a higher low and everything.
Well, I mean,
So,
Bitcoin to me is the most obvious and inevitable trade for 2025. I mean, it is and plus we've also shaken out a lot of the weekends. We had a lot of
yeah,
folks who before the election, didn't know what Bitcoin was, but when they heard that Trump was
right.
going to do something, they piled in. So we had a
Yeah,
lot we had a lot of new hands popping into Bitcoin, and so then when volatility struck, these guys didn't know what to do. They'd never seen this. They said, "Well, this is volatile. Of course it is." So they began selling, and a lot of the
yeah.
old timers were just held, and so that's why we're holding right now where we are. And I think we just flushed out a lot of fresh folks who came in because there was excitement around it with some sort of announcement around Trump. Well, this Friday, Trump is going to be unveiling, according to again to Howard Lutnick, the Commerce Secretary, who's been kind of leading the charge. They're going to be unveiling the crypto strategic reserve. And that I think is going to also lead to a pretty good, potentially a good rally in
Is it, let
Bitcoin.
me ask you this, Jerry. Is it
Yeah.
going to be in a treasure chest? Are they, come on, buddy. Are
Oh
they
my
going to do
gosh.
like a Geraldo Rivera unveiling of like Capone's big stash, and there was
Well,
nothing in there?
we'll see. We'll see.
All
But
right. Anyway,
but I fully expect Bitcoin to have a very good year. I think that you're going to see, right now with the uncertainty and the fear, it
yeah,
just doesn't seem like anything can go up anymore. It seems like, well, it's kind of over now. We're going to have these tariffs, and there's going to be a slowdown, and then, but one of the things that people are forgetting is that the Fed, has near about 450 basis points, to cut,
yeah,
and
true.
and they've
That's
got that's a lot of fuel. I mean, to overcome something, and believe me,
they will.
uh, they will. And guess who's been demanding it from day one?
Yeah, right.
President
So they
Trump
have the
wants.
cover. They have cover.
They
You
have
know,
cover,
and
and
yeah,
right. So
everyone's saying, well, how are they going to justify easing again and da 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 da. They have cover.
yes.
This is what President Trump is demanding. And anyway,
So
yeah, I could see that happening. But you know what I think is a trigger
hmm,
is going to be like 5,000 or 4,900 in the S&Ps this
okay,
spring or May, Mayish, first half of the year, and then the second half of the year we have a rocket ship to new all-time highs because of what
interesting.
you're talking about.
Interesting. Well, that's an interesting that I could see that playing out that way too. I don't think it necessarily has to hold the 200 and move higher. I think you could have kind of a more of a flush out.
Yeah,
There is too much fear here. There's too many people holding that shouldn't be. Apparently, they need to sell, and so that we may get more of a flush. But Trump has a desire to see the stock market go up. We know that. We know that from 4 years of this guy. We know that he loves the stock market, and when it goes up, he loves to talk about it, and when it goes down, he doesn't mention it. So we know that, or he blames somebody else. But then we also know that he knows that that stock market is really attached to his legacy. So in his mind anyway. And so therefore he is going to want to see it go up. We have a Fed that is has plenty of ability to lower rates to accommodate any of his craziness. And we also have Trump, who is really not doing half the things that he claims he's going to do in terms of punitive measures. And so, if we had a president who was someone who actually did what he said when it comes to these punitive measures and never compromised, and if we had a Fed that was sitting at 0% interest rates right now, I'd say
Yeah.
we are toast. I mean, this is going to be rough sailing. But we don't have that. We have a president who likes to talk out of one side of his mouth and then does something on the other side, and it's good for the
Yeah.
market. And then you have
Yeah.
a Fed that has ample fuel to put up with it. So to me, I can see this thing going on and on. To me, the big crash, if I had to say, if you put me up against the wall and say, when's the crash coming? Do you believe in a crash? Of course I do. Of course I believe in crash. I've lived through them. I know we're going to have them. I know oftentimes they come through the stupidest things too. Uh, mortgage-backed securities or whatever. You go through the list of the dumb things we do. Well, to me, my thesis is a little bit longer. Is that I see that we continue a incredible bull rally through the end of this decade. And in some ways, it
Wow.
does somewhat mirror the 1929 crash, almost a self fulfilling prophecy, if you will, where we run into the end of the decade really strong and then we have to cope with it at the end. So I think there'll be a very, very, very sharp decline at some point at the end of this. But I think the AI
So yeah,
fuel,
so we're in
yeah,
the roaring 20s,
yes,
and we're
yes,
and we're and it's what, 1920 right now, or
it's no,
21?
it's 1920, it's 1925. It's
Okay, so we
1925.
so we have 4 years.
Yeah, we're coming out of a. Of course, Trump's going to do the same thing. He's going to rally the market and then crash it on the way out, just the way they normally do. And then you'll have a
Okay.
Democrat that comes in and cleans it up, just like we did last time. So this
All right.
is this is the way that I see the pendulum somewhat swinging, and I could be totally wrong, but that's kind of how I position myself. I expect more upside, even some of it completely unjustified upside, just because of enthusiasm, and then eventually you come to a place where you got to pay the tab, and I think we're going to
Yeah.
delay that as long as we can. We're going to delay the pain
Yeah.
as long as we can.
Okay. I tell you what, I really interesting interview today, Jerry, and I learned some things and some, great perspective and some macro stuff that I'm sure a lot of people they stuck around enjoyed. I say we take this interview out with I'm all shook up. Your turn. Your turn, buddy. You're better than me.
Oh
Go ahead.
no!
Come
What
on,
am I?
Jerry. Jerry does
Okay, let's see.
Elvis.
Let's see. Well, well, bless my soul. Oh, what's wrong with me? Come on now.
Yeah, you know what's wrong with you? You're not bullish enough.
Oh, that's true. Well, I've
All
never been accused of
right.
that.
All right. All right. Jerry, a pleasure. I hope this is a great year for you and
Yes,
everyone who
likewise.
follows you and people that want to see your learn to be macro.
Yes,
Just talking to Jerry gives me a complete different perspective. He talked in terms of years, and I just want to say I didn't. So if you're young and you're out there, you need to. You can't count on just, you know, um,
what
being
happened
on a
next week?
roll. Yeah,
Yeah,
being on a roll your whole life. And I've had a very long career, but it doesn't last forever. It's tougher to do. So you really, I just, laughed off all the financial planners that came to me in my
sure.
20s and 30s and 40s because,
Well,
so,
it's
I'm
understandable.
just saying, so I'm saying that, uh, like I teach trading, I want people to learn from my mistakes.
Hmm.
And that's why I consider it. I know in this world it's hard to think that long term because you always think, these changes. We're going through future shock. AI's next, Jerry. I don't know what. That's probably going to be part of a bull market. I don't
Hmm.
know. But
Yeah.
think more than your last quarter. That's what
Yes.
I'll wrap it with. And you have to listen to people like Jerry to change your mentality from a trader mentality to developing something that you're going to have later on.
Well,
So,
if I can squeeze in an addition to what you've added, because I think it's great. It took me a while to figure out my own approach, and for a long time, I viewed everything as a trader. I mean, it was just a trader, and so therefore, I wouldn't get married to anything. I was like, if I get married
yeah.
to it, then it ruins the whole thing. And so I would stay very, very, unattached. But over
Hmm.
time, I realized, okay, what I'm going to do is I'm going to create I'm going to have two hats. I'm going to create a basket of investments that are long term that I really believe in, have conviction on, and then I'm going to have my trading. And what's so hard? It's very difficult though because you got to take off the trader hat to put on the investor hat, and then you got to take the investor hat off to put the trader hat back on, and that's challenging. It took me years to
It
figure that one
is.
out because I would
That
trade my
is.
investments and I would invest in my trades, and it was like, oh my gosh, it,
We've
it
done,
doesn't. Yeah.
we've done it all. We've
Yeah.
we anyway. That you can't learn experience, Jerry.
Yes, true, true. Well, if folks want to learn more, followthemoney.com. And I was just thinking when you mentioned that, we put out a weekend report called the Robinson Report. It's right here. And there's a page that I just wanted to show in conclusion. Well, we do lots of charts and things like that. But what we do is we track the trends. So that's what we've been doing now for, well over, I guess, about 15 years now. We
Mm,
track trends. And so we have a long-term trend for those who are more interested, in long-term investing, position trends for those who are position traders, and then the swing, which is much more
yeah,
near term. And so we
yeah,
track many markets and we track those trends. We have a trend trading software that people can type in any stock, any crypto. They can see what the
nice.
current trend is. And so this report comes out each and every week. It keeps up with many different markets, and it's good for traders and long-term investors. And so, for anybody out there, we're not just catering to long-term investors. We do have lots of trading tools. It's just that me personally, I just tend to, at my current age, I just tend to focus more on the easier, longer
Yeah,
term investing, not the intraday grind.
yeah,
I respect you for being able to do that because I know how much mental resources, that it takes. I know that it's challenging. So
yeah.
it's very, very challenging.
Well, I feel it.
Yeah.
Anyway, Jerry Robinson, everyone. Thank you, Jerry, for. I'll see you in May.
Sounds
And
great. Look forward to it.
all I could say is the king is ready to leave the building. All right, Jerry,
All
thank
right.
you, and everyone have a great day, great trading day.
All
Remember,
right.
don't just count your long term or trades, count your blessings. And, money comes and goes. Time is gone forever. Make it count. So that's a wrap. Good luck. You could join the team in 14 minutes on the morning edge. I'll see you, Elvis.
See you later.
Thank you.
Blessings, brother.
All right, buddy. That's a wrap. Adios, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.